Here we go. It's so good to be back. And yesterday, the S&P 500 had the worst day since August 5th, which is now dubbed the Black Monday of August. And anyhow, so what's next here? Nvidia yesterday wipes out almost $300 billion in market cap, the single most one-day wipeout in market cap ever in the history of the stock market. This morning, Dollar Tree reported earnings, slashes the guidance. Does this mean that consumer spending is getting worse here? So what about the recession? And then we had the JOLTS jobs report this morning. So as you can see, we have a lot to talk about because we need to see how is the market reacting, and then of course, most importantly, how we are trading it. And with that said, welcome back to Coffee with Markus and Mark. Mark, this is something that we haven't done in quite a while, right? Because first you were on vacation, then I had a family emergency last week, but it's so good to be back. Thank you so
Yeah,
much for holding down the fort.
of course, and thanks for being there while I got to take a couple of days off and enjoy the redwoods. But you're right, it is nice to be back and for it to be coffee with Marcus and Mark once again.
It's so much more fun doing it together. Now, talking about fun, where did my iPad go? It was just there, and now it is gone. All right. Well, we'll talk about it for a moment while I'm reconnecting it, and should be there any moment. So yesterday, kind of the worst day that we had since the beginning of August when we had this massive drop. So what happened?
You know, Marcus, this week it's really all about jobs. We have multiple jobs reports coming out. Of course, Friday is going to be the biggest, but it seemed like maybe there were some jitters or little uncertainty as we began the session, and then some disappointing manufacturing data just, turned it into a bigger drop.
Yeah, I need to let you talk for a moment, because I want to see that we can get the charts back up. Let's talk about Nvidia. I mean, Nvidia got hit yesterday, down 9% with the single biggest one-day market cap wipeout ever.
Yeah, I mean, Nvidia just having a real rough day, down 9.5%, finished the session trading at 108. And on Friday, we were trading at 119.37. So a pretty big drop there. And then overnight, after the bell, I think it was, there were reports that, or Bloomberg reported that the Department of Justice is subpoenaing Nvidia for some things, and that just snowballed pre-market. But it looks like there's a little bit of a reversal taking place today.
Yeah, so I had to bring up my screen here, so we're not on the iPad this morning for whatever unknown reasons, but we're all good. Yeah, a little bit of a reversal here, quite interesting. But yeah, also the S&P 500 showing a little bit of a reversal, just got stopped at the 50-day moving average. What do you know?
Look at that! Look at that! Maybe someone's keeping an eye on it, and yeah, a nice little reversal there. It's nice to see a little bit of a positive move here. Although, as an option seller, I welcome some volatility.
Well, talking about volatility, I mean, you wish was granted yesterday and even this morning. The VIX, the fear index, trading decisively above 20, pulling back right now. But yesterday, I mean, look at this. We had a 38% increase in volatility yesterday.
Yeah, huge spike there, and like you said, even the open today, it looked like there was a continuation there, but pulling back a little bit uh, during the session.
Yeah, and I mean, just looking a little bit at the open. So I have our heat map here. I want to bring this up. And this is what everything looked like in pre-market trading. So in pre-market trading, almost looked like there was a continuation of yesterday's slide that we saw. But then, yes, there was a reversal, because if you look at the markets right now, the S&P 500 up 0.4%, the Nasdaq up 0.5%, and the Dow up 0.55% here.
Yeah, look at that. Look at that. So, Dow making a way back towards those record highs. S&P, like you said, finding some support at the 50-day moving average, also around the 5,500 level. So some round number trading there, and positive for the day.
Yeah, looking at the 5 minute chart, I mean, we basically opened lower, then immediately went higher, and then we had the JOLTS jobs opening, and a day delayed because we did have a holiday on Monday. So right now, this is where everybody wants to know what's happening with the jobs market, because last time the jobs report was released on a Friday. This is what started this slide here. This is the Friday's jobs report. Then we had some more news over the weekend. So now the question is, okay, what will happen this Friday? And this is why traders have been paying attention to the JOLTS jobs report and also the unemployment claims tomorrow. And let's see what happened there.
Yeah, so JOLTS jobs coming in, 7.67 million openings there. This was lower than expected. 8.1 million jobs openings were forecast and were forecasted. And I mean, this is where a little bit of a negative reaction initially, and then it seemed like traders were kind of shaking that off.
Yeah, I find this super interesting because I thought that traders would be a little bit more concerned. I mean, much lower than the expectations, lower than the previous month, and yet markets are higher. And I think it might be connected to the probabilities of a rate cut coming up very soon. We only have 14 days left. And I mean, oh boy, this has changed, especially this morning. I mean, yesterday we had a 30% probability of a half a percentage point cut. This morning we are almost 50-50 with a 1/4% and a 0.5% cut.
I think that you hit the nail on the head there, Marcus, because we know that bigger drop that we had early August, it was kind of a snowball of events, but tied to that disappointing jobs report. And this is where JOLTS jobs, although the reports coming out later this week are more significant typically, JOLTS jobs coming in at the lowest level since 2021. The biggest decreases came in healthcare and social assistance, as well as state and local job openings. But with that just kind of points to the job market continuing to weaken, which you think would be a negative, but it does give some support for a potential half point rate cut, like you just shared there with the probabilities. And I think that's what traders started to get excited about this morning.
Right. It seems this way because honestly, with this information and also with the information that we got from Dollar Tree, I mean, Dollar Tree slashed its guidance for the year and say consumer spending is weakening. And I mean, this is one of the things where everybody says, okay, will we have a soft landing or can we have a recession? Is a recession coming here? And so this is where I must say I'm surprised. But hey, this is why we always see, right? I mean, trade what you see, not what you think.
Absolutely. Or follow the
Follow.
plan.
All right. Going back there, yeah, I mean, Dollar Tree, I mean, the results weren't, oh, I thought it was better, but yeah, it seems that the results were much worse than expected.
Yeah, earnings per share, revenue, full year forecast slashed. It was a pretty nasty earnings report for Dollar Tree.
Yeah. Crude oil also this morning moving lower. I mean, right now bouncing back a little bit, but this morning making lows that we haven't seen in 9 months. I mean, dropping below 70 this morning. So this morning we went as low as 69.19, so back in the 60s. And that's also kind of indicating that demand is slowing down. So, I mean, everything points to a weaker economy, but this morning traders are taking it as a hey, that's a good sign. So the Fed will lower interest rates, hopefully by 50 basis points, and therefore, I mean, spring start the economy again.
Yeah, this move in crude oil is interesting because it was pretty quick to reverse, and today trading at the lowest level since December 13th. This does have some investors wondering if OPEC Plus might delay production increases that they had originally planned for next month to start next month. But with crude oil below 70, now it's at 70.31 again. But at these levels, maybe OPEC Plus makes a move to get crude oil higher. But interesting quick drop there.
For sure, for sure. One thing I want to bring up is the yield curve here between the longer and shorter term yield. So here we have the 10-year yield versus the 2-year yield. That was negative for a long, long time. A few days ago, it dipped above zero. Did you already talk about that?
I did not. I did not. Yeah, it's that's where you had the negative yield curve, and typically you have longer dated treasuries that will be a higher price, but then short term we saw that 2 year spike with the Fed's rate hike campaign, and that's been a long time coming because a lot of times this can be viewed as a recession indicator when it inverts, like it has been for a long time. But now, right now, this moment, they're the same.
Yeah, I mean, we see it right here, the 2-year yield and the 10-year yield. So right there. I mean, it's good that we're getting back to normal after more than 2 years. It has been 2 years, 2 or 3 months here. So kind of crazy.
Yeah,
All right. You got everything else for the markets, or shall we take a look at our positions?
we could take a look at positions.
All right, let's do this. Let's hop over here. And first of all, with yesterday's drop, we did have a WTF signal, a win the fear signal. CG, Constellation Energy Group, popped up this morning as a signal. Now, you and I, we decided not to take it because we do have our warning sign here that says the symbol has been trading for less than 5 years. Therefore, we only have limited data and we recommend not to trade it. So we did not trade it since we have just about 2.5 years data. Usually we like to see 5 years of data. However, if you choose to ignore the warning and take it, it's a good trade so far. I mean, the signal was to go long at 177.68, and right now it's trading at 180.42.
Yeah, and this is where it's a valid signal, right? So the scanner identified it. It's absolutely a valid signal, and I think that it was worth taking a look at. But I like to remain consistent. And so back in July, when we had a signal, I chose not to take the trade because of the minimal data that we had. And back then, we even had less data than we do now. But I chose to stay consistent. If we were looking at 4 years rather than 2.5, probably would have pulled the trigger instead of the warning there. But passed on this one. And we'll see if there's more opportunities popping up today.
Yeah, we shall see. Now, hopping over to our wheel positions. I mean, we both have 5 wheel positions here. So starting with CSIQ, and we've been talking about this. CSIQ today up a little bit. So we're up a half a percentage point. Need to see if it stabilizes here and if it gets a little bit more excited about the possibility of a half a percentage point interest rate cut. So nothing to do for us here. Then you are in BP, British Petroleum,
Yep.
and with crude oil moving lower, so is BP. Today, down 0.46%, 0.5%, so nothing for you to do. But you did sell calls earlier, right?
I sold. I have no calls right now. Those expired on Friday, so waiting to sell calls again. And yeah, this is to be expected with that move in crude oil. Hopefully, if we see a little bit of a bounce in crude oil, maybe an OPEC move, we get back right up to where we want it to be.
Yeah. Halliburton, HAL, another stock that we have pretty much same here. Yesterday, pretty nasty slide of 4% with crude oil moving lower. Today, almost flat, and we get a dividend payment because today is ex-dividend date, and for shareholders of record, which we are, we're getting 17 cents per share payable towards the end of September, September 25th. Typically, we see a stock dropping by the dividend amount on the ex-dividend date. So this actually, where we see today that we did not drop by the full amount, or we initially we did, but we are bouncing back right now. it's a pretty good sign for our position.
Absolutely. So with that ex dividend amount of 17 cents and the stock being down 7 cents, that would be a positive in this situation. And yeah, I mean, part of the benefit of trading HAL is it had a decent yield.
Yep. The yield 2.2% here. And then
It was a little bit
KSS.
bigger, but that works.
Yeah. KSS. I mean, yesterday, a great move. I mean, while the markets were plummeting, KSS calls up 4.7%. Today, a follow through of 2%. And yes, I did sell calls against my existing position at 2150 just before we started the show. So I sold
Okay.
calls for 15 cents, getting 84% annualized, expiring on Friday. I mean, this was just too good not to take advantage of this.
Yeah, that's nice there. And I'll get an alert out to any mastermind members watching this. I'll update that so everybody knows.
Yeah. Would you also mind putting it into the M&M trades?
Sure.
Okay, great. Merck a little bit all over the place. I mean, Merck had a really, really good run, got hit yesterday. Today, I'm very surprised to see it down 1.8%. Didn't see any news that warrants this move because initially, I mean, this year looked like a great trend line. Since I was busy with a family emergency, I did not sell any calls, even though I probably could have, but I wasn't really paying attention to the markets. I was focusing on my family. And this is why probably missed this right now, a little bit lower, slightly below my break even right now. So I have to wait until Merck comes back up. Did you see any news from Merck?
No, I didn't. I was surprised too because yesterday we talked about it in the mastermind call. It looked like there was some nice premium there on that open, and then uh, I mean the broad market dip and the reversal there makes sense, but today a little surprising.
Yeah. So we'll see. We'll wait and see. And UPS making a move to the upper part of the range here. So we have talked about this. We do have a range here between, I want to say, 124 and 130. I mean, as we can see this morning, pushing higher here, making a high of 129.53, but cannot push above 130, pulling back a little bit here right now.
Yep.
So nothing for us to do for this one, and these are our open positions. So let's see what's happening in the markets right now. If we are pulling back a little bit more, or what happens after this JOLTS jobs report. If traders are still happy and positive, or if they say, "Well, it doesn't look too good." But before we do this, Mark, did you keep up the tradition of telling really bad dad jokes?
Oh yeah, really bad ones. I definitely kept the tradition going.
Well, now we're back with the competition after you win for, I don't know, 10 days straight in a row. So let's do a friendly competition and see again who has the better dad joke or the best of the worst dad jokes. I'll let you go ahead.
Okay, and you know, in addition to trading, Marcus, we both share a passion for barbecuing and cooking. We love that. I also have an interest in history and science, and so recently reading the book The Life of Einstein, and it totally shocked. Did you know that Einstein actually was a real person? I just thought he was a theoretical physicist.
All right, all right. So I have one for you as summer is winding down at the end of the summer. What do you call a Frenchman in sandals?
What?
Philippe Fallope.
Okay, okay. That works too. Good old Philippe.
Philippe Fallope. Okay. With that said, let's see. So markets are pulling back a little bit. So in the S&P 500, we're coming off the highs. In the Dow, same. We're coming off the highs. In the Nasdaq, all three indices taking a breather here. IWM, the Russell 2000 small caps, moving exactly the same way, taking a quick breather here, waiting and see if we have any more impulses. And I mean, we know that this week is the big one where on Friday we do have the jobs report. And until then, we also have tomorrow the ADP ADP non-farm employment change, and the weekly unemployment claims. So these could move the markets. We also have tomorrow the final services PMI and the ISM services PMI. So we'll see. I mean, there's never a dull moment.
That's for sure.
That's for sure. Okay. With that said, let us know in the comments as soon as the stream is over who had the better dad joke. Just give me this one today. Anyhow, and then if you'd like this show, give us a like. If you feel that this was good information worth sharing, there's a share button right underneath. And make sure that you subscribe so that you don't miss an episode, because you don't want to miss tomorrow when we fill you in of what happens, what news are coming out from the labor market, and how traders are reacting to this. Until then, have a great rest of your day.
Happy trading, everybody.